Welcome to Central Bank Central. I'm Kathleen Hayes. Remember when China was an economic engine of the world? Well, it's still the second biggest economy in the world, but that engine has been sputtering ever since the pandemic. The damage done by the property crisis helps keep the economy soft. Households who lost money in that crisis are forced to save rather than spend. That depresses domestic demand. In turn, that has devastated local government finances and left them with massive debt. Clearly, the last thing China needs now is another tariff battle with the U.S. Joining me now to discuss all of this and more, its ramifications, is Sam Radwan. He's partner, co-founder of Enhance International LLC. Enhance International is a management consultancy that advises financial services CEOs in the Greater China region. Back to Central Bank South Central. It's great to see you.
A great pleasure. Great to see you again.
So we heard President Trump say in the last 24 hours that Xi Jinping, China's president, may be visiting the U.S. soon. What do you expect?
Well, there's no question about it that it is top of mind, the whole tariff issue, and how China is going to navigate through this and try to figure out what's going to be on Trump's mind. That is a critical component of how China is looking to re-energize its economy, and they're keeping a very, very close eye on that.
So obviously, you advise many people who are presumably affected, no matter what you're doing, no matter what your business is, your position, this is a very big thing. So how are people in China looking at this?
Uh, Very pessimistic, right? They are expecting the worst. And in a way that is kind of reflecting the mood and the consumer confidence, which we will get into in a little bit more detail. But they are really very pessimistic about what the outcome might be. Um, However, I take a different view, and I talk to my counterparts and tell them that it's not going to be as bad as they think it's going to be. And the primary reason for that is I believe that Trump is coming into this wanting to make a deal, right? If you read his book about or his thinking around the art of the deal, right? He's going to play hardball in the beginning, but he knows very well that China is a critical component of achieving his economic goals. And from my understanding, those economic goals fall into three areas. One area is to see to it that the stock market prospers significantly during his term. Number two is employment, and number three is inflation. And if there's any economy that can impact all three, in my view, it is China. So the Chinese are very smart, especially with Wang Yi and his negotiation capability. It's a question of, are they now going to be able to play Trump's game? And that's what we're going to see unfold. So I'm a little bit more optimistic than my counterparts here in China.
Well, I want to ask you to give us a little more explanation how China can, those three goals you just mentioned of President Trump's, why is China in such a strong position to help Trump fulfill that? And in what way?
That's an excellent point. And, you know, I've been giving advice to some of the think tanks here in China, right? So the more obvious one is inflation and how China is a critical low-cost provider to the American population, especially lower income population across the board. You know, the number one export from China is electronics, and that is a key component to consider, along with apparel and toys, et cetera, so on and so forth. But then the other area that may be less of a consideration is the fact that if Trump is looking to, I guess, reverse the deindustrialization that America has gone through, China could play a role in that. China could actually create jobs in the US if they start investing some of their newer technology where America may be lagging to some degree, in the U.S. The example we talked about is electric vehicles. China has come a long way in developing cost-effective electric vehicles, right? If they want to sell their electric vehicles in the US, they can certainly do so by building plants and creating jobs in the area and achieve such a goal. And we're talking about tens of thousands, if not hundreds of thousands of jobs that can be created that way. And then the
Has-
third component,
Go
please go
ahead.
ahead.
Sorry.
Yeah. I was going to hit on the third component,
Thank you.
but yeah, but the third component was around, the stock market, right? There's a rule called CFIUS, right, where the U.S. is limiting how much Chinese can invest in the U.S., right, up to 5% and not having a controlling stake in a company. But that capital will still be welcome, right, as long as it hits that particular limit in order to see to it that there's more capital investment on the part of the Chinese. And it is a major goal of the Trump administration to maintain the supremacy of the US dollar. And if there is one counterpart that can play a big role in that part, it certainly will be China.
Well, do you think that the Chinese government, do you think Xi Jinping is on board with all of that? Because it seems to me that the rhetoric on both sides hasn't suggested, I mean, Trump's asking for it, right? Oh, sure, the Chinese can come in and build stuff and it'll be great for everybody. But have we heard Xi Jinping express much like that?
Well, everybody's keeping their cards close to their vest, right? But I would say that Xi Jinping has never been more eager to make a deal than now, given the current domestic situation, right? He certainly won't show that, but it's very, very important for him to see to it that he comes out of this with a plan that will help jumpstart the Chinese economy again, right? So yes, everybody will, show their poker face in this particular situation. But I can't think of a moment where China was more eager to make a deal with the U.S. than we are now.
So, in terms of where the economy is, because I started as I introduced you talking about the fact that China's economy is not in the best shape it's ever been, and that's putting it mildly, right? So, the consumer is very important here, but I just want to ask you a bit, for starters, about business confidence, because you said people that you speak to and advise are pessimistic about what's going to happen. So where is their momentum when it comes to being willing to, right now anyway, before all of this good news potentially occurs, where are they right now in terms of their ability and eagerness to make the kind of investments and take the kind of steps that will help move the economy forward?
Well, if we go back to the interview that we had in July of last year, I had mentioned to you that I have never seen such pessimism before in China. And it was a fairly good predictor, as 6 months later, you've seen the 10-year bond go down to historic lows. When we were talking, it was around 2.3%. It dove all the way down to 1.6%, unprecedented. It's coming back a little bit now due to the fact that it was oversold. So certainly the pessimism can't get any worse from where it was in July of 2024. And I think we're starting to see a slow pickup in that area. There's no question about it that the Trump tariffs is a big cloud hanging over the mood in the business world and the willingness to invest, right? There's no doubt about it. And then a good outcome will have a positive effect. But then the fundamental factor remains one thing, and I'd like to add a third. It's the real estate market, right? The real estate market is at the core and the heart of the economy in China. And what we're witnessing right now is good news and bad news. So since we last spoke, there has been a deceleration of the number of foreclosures coming to the market. So that's the good news, right? It's starting to flatten out. The not so good news is because of such a glut of inventory, the auction price realized is at a steeper discount than it was last year, around 74% of what the bidding price is, right?
Oh.
So that's putting tremendous pressure on home prices, right? Where their ability to recover is going to be very, very difficult. And then the third one that I would like to add is the regulatory environment. If you, as you're aware, as your listeners are aware, Xi Jinping recently had a visit, which was again unprecedented, with the tech industry and the tech entrepreneurs
Yeah.
to emphasize how they are a critical part of the economy, and it is time for China to continue its path down innovation. In other economies, it would be considered a non-event. But in China, this is a critical message that they needed to hear.
Well, of course, after what happened to Jack Ma and the tech entrepreneurs a few years ago, that was what was preceded the property crisis, where all these developers who had built and taken on lots of debt got hit. So Beijing, Shanghai, big cities, right? Tier one. But what about the rest of the country? What about tier two? What about tier three people who have been hit hard by the property crisis, and many are still not in such great shape?
Yeah, that's an excellent question. It is very, very important when you're analyzing the real estate market to break it up into the three tiers that exist in China. So you've got tier one cities like Beijing and Shanghai. Like you said, they're going to be doing okay. You know, they may flatten out or may even see an appreciation in real estate sometime this year. Then you go to tier two cities. They're also probably going to be okay, but it may take 2 to 3 years before they start seeing, an appreciation in their real estate. And the real issue lies with tier three cities. And while the tier three cities are a smaller part of the GDP, they are a much larger part of the population. And tier three cities, you need to look at the health of the local governments, which is not that good at all, because they rely primarily in terms of revenue income, in terms of selling real estate, land for real estate development. And that is drying up. So that is the big question mark that needs to be closely looked at in order to determine whether there will be a true recovery in that market, or whether there will be malaise that will continue on for a very long time. And more importantly, what the government's going to do to bail these governments out, or tier three cities out. Recently, there was an announcement by the government just a day ago around more stimulus to boost consumer spending. And if you read between the lines, a major initiative of this policy will be to help these tier three cities reconfigure the real estate that they originally developed for the higher end market, to reconfigure it for the lower end market. That's one way to go about the problem. But as you can imagine, it's fairly deflationary and can definitely have an impact on the fact that real estate prices are not going to be recovering that anytime soon, especially in these areas.
And if real estate prices aren't going to be recovering anytime soon, and I'm a property owner, and the value of my property is way down, how confident am I going to be? How much is the consumer confidence numbers, which have fallen in China pretty sharply, bounced off the bottom? But what is your sense of, is China going to have to accept that it's going to kind of bounce along for a while, and it's going to take time for all this to play out? And or will some of the steps the government's going to be taking to get spending and boost the economy going, and these new proposals that have come up, things like a paid annual leave program and more things like that. Is that going to be another thing that helps consumers, or is it going to take President Xi making a deal with Donald Trump and getting something on the table that makes businesses more confident again and maybe helps consumers as well?
Yes, that's a very, very good question because we are of the strong belief that no matter how much the government tries to get involved in terms of boosting consumer confidence and boosting spending, it's like pushing a string, right? There's only so much they can do. This thing has to sort itself out. I will take your point about me witnessing my property price going down a step further. In China, I may have one home that is my property, but I have a second home that is basically my investment or my nest egg or my 401k, right? Equivalent. So it is much bigger than just the home that I'm living in. This is my nest egg. So yes, absolutely. The real estate market itself has to show significant improvement before you start seeing consumer confidence coming back. I'd like to give you an example of the numbers that came out on consumer spending. A first look at what you see in terms of consumer spending, you would say, yes, 4 to 5% growth in consumer spending, that is fairly healthy. But if you look underneath the numbers, there are two parts. One part is the products, and the other one's services. If we take a close look at products, there has been significant subsidies that the government has been providing for vehicles, for trading in your car, for appliances, for electronics, etc. Yes, they did boost spending, but they were deflationary, and there was negative CPI on the product side. Right? What really complemented that and helped see to it that the CPI was closer to 0.2% was the services side that is growing and becoming a bigger part of the pie, now around 46%. So the more the government injects stimulus for the consumer to spend, the more deflationary that's going to be. And I don't think that's very good news for the price of your assets or opportunities for wage growth, etc.
Well, I'm seeing in various stories mentions of the Xi put. In other words, that Xi Jinping is determined to get the consumer going, to reassure the tech entrepreneurs that he, pushed to one side, that no, 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 we're really behind you now. Um, how do you see how do you see that coming together? Can Xi Jinping convince everybody that no, this is the next phase, the past is done, and now we're going to move forward in a direction that we, you know, sort of pushed ourselves off of just a few years ago?
Well, like you mentioned, I truly believe that the Jack Ma incident that took place right before COVID was very, very significant and a turning point, right? In terms of knocking the wind out of the entrepreneurial spirit that existed in China. Couple that with the fact that there is some incredible talent here in China, especially in the engineering space and the biopharma space, etc., that is unmatched anywhere else in the world. So the fact that you are allowing or facilitating the entrepreneurial spirit in that area is going to be critical, right? But it's certainly one leg of the stool, and there are other parts that need to be dealt with as well. But it's a very important part of leg of the stool that you need to take a close look at. I'd like to give you an example from a U.S. company perspective. As you can imagine, as the rhetoric started to rise around China and what China is doing to us, you can imagine that a lot of these Fortune 500 companies have done contingency plans to try to determine what it would be like to decouple from China. and what impact that can have on their business. And this is my personal conclusion, but I believe the conclusion that they would come to is that the engineering talent and the um, biopharma talent and the infrastructure that lies underneath it is unmatched anywhere else in the world, right? So they cannot find the volume of engineers and the volume of scientists and the talent of scientists and infrastructure anywhere else other than China. So I wouldn't be surprised, for example, if you don't see, like, for example, the pharmaceutical company not only avoiding to pull back from China, but actually doubling down and increasing their investment in the China market, right? So a long-winded answer to tell you that yes, the tech industry is a critical component, and it's very, very important that the government lends its support, especially given how much influence the government has on the attitude of the sentiment towards investment in that area.
So just to kind of wrap a couple key points here you made together, then it seems to me that this view, this analysis, what you have seen of how U.S. companies, big pharma, certain kinds of companies really need to be in China. And so I'm guessing you have sort of an optimistic vision that we might get past all this, all the angst and the worry and oh, we're in a trade war, we're in a tariff war, and find that somehow this could lead to Trump getting what he wants in terms of some Chinese investment and that kind of link, and then China getting what it wants in terms of these big companies that can help fuel their growth again, are going to get what they want too.
Absolutely. And when I came to China and I came with this optimistic view, they laughed at me. But at the end of the day, the one who laughs last, you know how it goes, right? So
So there you go. Well, I'm going to thank you for joining me, Sam. It's evening for me. It's morning for you. You're probably off to some very important meetings there in Beijing. So again, thank you for joining me.
my pleasure. Thank you very much.
And that's Sam Radwan, co-founder and partner at Enhance International LLC. I'm Kathleen Hayes, and this is Central Bank Central.